for part 2 of the series on how I invest in Bitcoin, I'm going to talk about something that may be a little controversial among the Bitcoin community and many Bitcoiners who believe that Bitcoin is the ultimate asset in the Bitcoin ecosystem and therefore should be the core of your Bitcoin holdings. I'll just admit, Bitcoin itself is not the largest part of my Bitcoin exposure. My main Bitcoin investment, my main Bitcoin exposure is to a stock called Strategy, or formerly MicroStrategy. Ticker symbol is MSTR. It's a NASDAQ company. They're actually included on the NASDAQ 100 now. And that is my primary Bitcoin exposure. I do hold Bitcoin, as I discussed in part 1 of the video. And even though it's not a majority holding, I do consider it a core holding. In a core way that I gain exposure to Bitcoin, but I am also exposed more to MSTR or strategy stock. To address kind of the why do I buy MSTR instead of holding just Bitcoin? Why is part of my Bitcoin exposure, why is it in strategy stock? Well, to start with, it started that way last year in 2024 in the springtime, after I had done a lot of the research, done a lot of the work myself into understanding Bitcoin and understanding that I wanted serious exposure to Bitcoin, I decided I was going to start investing in it. And I could not purchase Bitcoin in the vehicles that I wanted to purchase it in. So yes, I opened an exchange and was able to start dollar cost averaging into Bitcoin using river.com or the River app. And then I was eventually, when that got up to a level I didn't want it on the exchange anymore, I moved it over into cold storage. So that was a part of the investing, but there were areas and vehicles that I wanted exposure to Bitcoin that I could not get. And the main one was tax advantaged accounts. In my retirement accounts, they're with a big online brokerage firm, and the ETFs were approved. So IBIT, FBTC, and the other direct Bitcoin ETFs were approved. They were legal to buy. And when I went to try to buy them within my IRA accounts on this online brokerage platform, it said I couldn't. They were too risky, too new, and it completely blocked me from buying that, which was extremely frustrating, obviously, and I think it's wrong. But I still had to deal with that. So I could either move my retirement accounts to a different format, a different forum, and that would allow me to get exposure to either directly to Bitcoin or to the Bitcoin ETFs, which there were ways to do that at the time, but that just wasn't really worth it to me. And so what I did was I decided, well, I'm just going to get small exposure to MSTR. So I bought it within my IRA to get a proxy for Bitcoin exposure. And I'll talk a little bit about how it acts as that in a few minutes. But the second major area that I wanted to invest in Bitcoin and was unable to was similarly in the same brokerage firm. We have a cash management account for our corporation, for our business. And that's where I like to try to invest part of our cash reserves over and above what we need for a reasonable retained earnings or emergency fund. Over and above that, if we're blessed to have any more, I like to put it to work within the corporation and generate some return. Over the last 3-4 years of doing that, I've primarily been in high-yielding T-bills, money market accounts where you could get pretty close or over 5% at times. And I was pretty content to do that. But more recently, I've realized, that I need a little bit of an exposure to something that offers more yield. And because I'm taking such a small position as a portion of that account, I thought MSTR was a good way to do that since Bitcoin was unavailable at the time. Now, since then, River has started supporting business accounts, which means you can open an account in the name of your LLC or your corporation, and you can purchase Bitcoin and hold it on your company's balance sheet as part of your reserves. And so we do some of that now as well. But at this point in time, I wasn't really looking to overcomplicate how many different accounts we had and things like that. So this time last year, I started to gain some exposure into MSTR and buy into that a little bit in the business account. So the first reason that MSTR became such an important part of my Bitcoin exposure and our Bitcoin holdings as a family and as a business was out of necessity, was because the platforms that we use to invest would not allow us to own the Bitcoin ETF, and I didn't have a really good way, simple way to streamline into buying off of an exchange under the business. So I ended up with shares of Strategy, or at the time it was MicroStrategy. Over time, the more MSTR shares that we purchased, the more I would research the company itself. And that's where I developed some convictions that MSTR is an asymmetric play on top of an asymmetric play. You know, I did a video why I invest in Bitcoin, and part 2 was the asymmetric risk return ratio. The fact that Bitcoin, for extra volatility and extra risk, offers you even more upside potential. MSTR is just a leveraged play on that, which means what? Which means there's additional volatility, additional downside risk, and there's additional operational risks because this is an operating entity and a company that has employees and people who are dealing with the Bitcoin and dealing with storage and custody and dealing with making decisions on what to do. So there are additional risks. What if Strategy went back on their plan for Bitcoin and started to sell? What if they made a mistake? What if they lost custody to some of their Bitcoin? There's all sorts of operational and strategic things that Strategy could do that I believe would harm the value of the stock and would harm value for the shareholder. Of course, that's not their goal, and that's the case with really any company. Any company that you invest in could make bad decisions that risk of ruining the company, and it happens. It happens slow, and it happens to some companies all at once. So, yes, there are additional risks with Strategy. However, along with those additional risks come exponential upside potential. Why? Why do they have asymmetric upside potential? Well, because they have, and this is kind of point 3 of this video, is that Strategy has first mover advantage. They started back in 2020 purchasing Bitcoin, and they have stayed consistent with that plan to purchase more and more Bitcoin, and they're using a variety of different methods to attain more capital to do that. But in doing so and in staying consistent, even through the ups and downs of the cycles we have seen, what has happened is they've accrued over 500,000 Bitcoin. They've accrued over 2.5% of the finite supply of 21 million Bitcoin. And so they've put themselves in a position where it is literally impossible, in my view, to catch them. Even if a company with the cash to do it, like a Berkshire Hathaway, or like an Apple, or like a Microsoft, who has the capital and has the ability to access capital more than the Bitcoin holdings of Strategy, if anyone else were to start to buy in that kind of volume, it's going to push the value of Strategy's Bitcoin through the roof and allow them to continue to grow exponentially. So at this point, and there's a lot of people who feel this way, you can't catch Strategy. They have built a moat of Bitcoin, of engineering power in their company and onto their balance sheet that is going to be difficult for anyone to match or to catch up to. And that is why any attempt at doing so is going to drive Strategy up in an asymmetric, exponential way. So as Bitcoin goes up, you could see Strategy go up 2x, 3x, 4x, and blowing out what's called the MNAV, which right now a lot of people look at the value of Strategy, how they are valued as compared to the book value of their business, which is primarily their Bitcoin holdings. And they're valued at a little over 2 times the value of their Bitcoin holdings. So let's say, these are rough numbers, let's say they hold about $50 billion in current US dollar value Bitcoin. The company is currently worth around $100 billion. And there's a whole nother discussion to have around the MNAV metric and whether that is going to go up or down in the future. It's probably going to do both. But I'm still comfortable holding it as my core Bitcoin holding because I'm comfortable taking those risks. It's a company I believe in. I've talked about in the past that when you are a small business owner, you have an outsized exposure, financial exposure to your own business. You're pretty much all in. The majority of your net worth, the majority of your ability to make money is tied up in your business. And so I've gotten used to trusting a business. And I began to ask myself last year, as I was buying little bits of MicroStrategy, I was like, wow, is it possible that I actually trust this business? Do I trust strategy to perform better than my own business? Do I trust strategy to perform better than Bitcoin? Do I trust strategy to perform over time better than the Magnificent Seven stocks or the S&P 500? And the answer that I've come to personally is yes, I do trust this company to perform better. I could be wrong. I could see vast drawdowns in strategy's value, and I have seen some of that. The beginning part of this year, I was buying strategy well over $300 a share, and I watched it go all the way down into the 230s. Fortunately, I didn't sell any. I still believed in my thesis, and it was kind of a blessing to get to experience that drawdown and see that, oh, I really do have some conviction here. Now, if it had drawn down into the low 100s, that conviction could have been tested in a whole different way. However, experiencing a 20-30% drawdown didn't chase me out. And I'm glad it didn't. I actually went even more into MicroStrategy, which is why I now have, as strategy dipped down into the mid 200s, I really leaned in and bought more. And it's because of that move during the first quarter of 2025 that I now have greater MSTR exposure than core Bitcoin exposure. So first, it came out of necessity. I didn't have access to the Bitcoin direct exposure that I wanted, so I went with MSTR. Secondly, I began to study the company and actually developed a conviction that they had a good business and that they had a good plan and that they have some of the strongest execution of that plan of any public company today. And so I became convicted that this company was a good company to hold and have higher than usual exposure to. I've had those kinds of convictions before. I've held single stocks before that I felt strongly about. Back when oil was very low in price, was down below $20 a barrel, I went pretty heavily into Exxon and Chevron. Those played out pretty well. Probably held on to them a little too long and saw them dip a little bit. But I did. I went pretty heavily into something I believed in. Again, this is a function, the willingness to go heavy on single stock exposure, the willingness to go heavy on single asset class exposure like Bitcoin is a result and a function of my age. So because I am young, because I'm in my mid-30s, and because my investing goals are different than someone who's 55 or 65 or 75, I have a greater time horizon. I'm willing to take these greater risks. I'm willing to take some flyers and put greater exposure into things that I have conviction on. But again, that's not right for everybody. You have to look at your own situation, your own convictions, your own beliefs, and do what is best for you. But I developed conviction secondly. And so I've stayed in that MSTR position and even grown it over time, rather than converting it at some point as I gained the ability to do so. I have not converted it to Bitcoin. At some point I may, but right now I believe more in MSTR. The third and final reason that I hold such a hefty proportion of my Bitcoin exposure in MSTR is that I believe that what they are doing is adding value to my shares. And the way that you measure that is the metric that they've started talking a lot about, and it's called Bitcoin yield. So just to briefly explain what that means. Strategy is acquiring Bitcoin in a variety of ways. They're they're gaining US dollars through issuing of convertible bond notes. So they're issuing debt at very low or zero interest rates. They're taking that money and then they are purchasing Bitcoin with it. And they've added two new ways to gain more capital. They are selling two different kinds of preferred stocks that pay out a yield, that pay out a dividend, STRK and STRF. And the money that they're generating from that, they're converting into Bitcoin. And then the other one that they've been using is they are issuing more common stock shares. Now, you hear all of that and you're like, wow, they're taking on a lot of risk. They're taking on a lot of debt exposure, and they're taking on a lot of stock dilution, ownership dilution of the current shareholders. So let's take each of those in turn and talk about why I've become comfortable with it. First, they're taking on a lot of debt. When you hear it's a leveraged play, now I'm an early disciple in my life of Dave Ramsey. Read multiple Dave Ramsey books, love his personal financial advice. If Dave Ramsey looked at my MicroStrategy holdings, he would laugh me out of the room. Maybe he's right. He thinks debt is an evil and wicked thing. I've seen the way that debt is used in large businesses to grow. What strategy is ultimately doing is they are issuing these bonds at, again, very low interest rates, almost zero interest rates, and most of those bonds are already set to convert into stock, so they're not going to have to pay them back in cash. A lot of these early issues of these bonds, because they're convertible into common stock, they're going to end up converting, and they're not even going to have to end up paying out that debt. But even if they do, if you take all of their issued bonds, all of their corporate debt, and you include their preferred stock obligations, you're still looking at around 12% approximately. That goes up and down by the day, but around 12% of their total market cap. So their debt to market cap ratio is around 12%. That's an extremely healthy ratio. The vast majority of businesses in the S&P 500 are levered way higher than that. What would have to happen for that debt to become an issue is that Bitcoin would have to crash over 70% in value. It would have to crash into the low teens, and currently it's valued near $100,000. It would have to be worth between $10,000 and $20,000 per coin for an extended period of time. It would have to stay there for years and not bounce back up for strategy to have an issue with making good on those obligations. And so the bet I've taken here is that that's not going to be a problem for strategy. I believe in Bitcoin more than that. And so I believe Bitcoin's debt is going to remain healthy even as they issue more and more of it. Okay, so that's the debt piece. I don't believe that strategy's debt is an issue. I believe that it's actually a brilliant move, because what he's doing is he's borrowing money in a devaluing currency. He's borrowing money in a currency that is being actively printed and debased, the US dollar. I've talked about this in a previous video as well, that you are not a fool to sell that which doesn't retain any value, cannot retain any value. You're not a fool when you sell that and buy something that holds value. So that's what strategy's doing. Selling the worthless US dollars and using financial instruments to get even more of those dollars, and then buying Bitcoin. And so they're going to be able to handle that debt and pay back that debt in devalued dollars, or just by converting into their common stock, which is the more likely outcome. So that's the debt piece, the debt concern. The second piece that might concern people with owning a stock that is issuing a lot of, it's called at-the-money shares. If you hear somebody refer to they're hitting the ATM, it took me a while to figure out what they were talking about. It sounded like they were just making a joking reference to like the ATM that we think about at the bank where you go and get cash out. But what that means is they're selling additional stock, which they're allowed to do. The SEC allows that. They're allowed to sell a lot more stock. But when they sell more stock, what does that do to you? It devalues the value of your stock. So MSTR is selling out the money shares, and they are diluting their current shareholders. Well, isn't that a concern? Yes. That's why I had to look into it more and figure out why that's okay. What you come to find out is that as they dilute their current shareholders, it actually is adding value to the shareholder in Bitcoin terms. They're diluting the shareholder in terms of the percentage of the company that they are entitled to. So if I had 100 shares of my business and I sold 100 additional shares, and I sold those out into the market, and I owned the first 100 shares, I've diluted myself by 50%. I now only own 50% of the company. That's what I mean by dilution. So when they print shares and sell shares into the market, they're diluting current shareholders. And now I, as a shareholder of MSTR, I own less as a percentage of the company as a whole. Why is that okay? Because with those dollars that they sold the shares for, they immediately went and converted it into Bitcoin. And now the number of Bitcoin held per share is higher. So you own less of the total company, but the company owns even more Bitcoin, and so your share is worth more Bitcoin. That is what Bitcoin yield is. It means that as the share is diluted in dollar terms and percentage of ownership terms, it is accretive by adding Bitcoin per share. Last year, the Bitcoin yield, the amount of Bitcoin per share, went up by over 70%. That is the most powerful reason for me why I am not selling MSTR to buy Bitcoin. Because just by holding this company, I am investing in the strategy of Michael Saylor and his team. And they added 70% to the Bitcoin per share that my shares are worth. Already year to date, that's over 12%. So by simply holding Bitcoin, yes, I've removed some of the counterparty risk of being invested in a Bitcoin treasury company. I've removed some of the operational risk. I've taken away some of the additional up and down volatility, yes, in owning straight Bitcoin. But by owning MSTR, my underlying Bitcoin holdings are growing due to financial engineering and execution, due to owning a business. So people talk about, well, Bitcoin doesn't produce anything. Well, if you believe that Bitcoin is money, as I do, then you can definitely say MSTR produces and generates money. Real money, hard money, sound money. And that value is accreting to my shares. And so I believe that my shares are going to grow at an exponential rate and exponentially outperform other things that I could own in the risk portion of my portfolio. And again, I do look at this, the MSTR holdings in particular, I do look at this as the risk on portion of my portfolio. The reason I'm able to hold over 30% of my assets in Bitcoin and MicroStrategy and other instruments that we'll talk about, the reason I'm able to hold that heavy of a concentrated position in such a volatile asset and still be able to sleep fine at night is that the other portions of my portfolio are extremely conservative. Over 1/3 of that money is still invested and kept in cash. High yielding bond funds, short-term bond funds. Look up ticker, one of my favorites, ticker PULS. Look that up. Still pays around 4.5% yield. You can still get short-term treasuries that pay around 4%, short-term CDs. And I am heavily invested in those. And so even as the volatility whips up and down in the part of my portfolio that is in Bitcoin and MicroStrategy, unfortunately it's been going up here lately, but even when it goes down, I don't have to panic because the short-term money in my portfolio that I think I might need in a reasonable amount of time in the next 6 months or up to the next 2 years is in cash. So I still have a cash position that offsets a lot of the volatility risk and allows me to stomach more of that in order to gain exposure to what I have conviction in, which is that conviction is in that Bitcoin is going higher and MicroStrategy, strategy, MSTR is going even higher. So leave a comment. Let me know what you think. I know a lot of the Bitcoin maximalists might think you shouldn't be that heavy in the strategy. Your core should be Bitcoin. Strategy might just be a little fringe of your portfolio. I'd love to hear it if that's your thoughts. On the next episode, what I want to get into is another reason, kind of the last reason that I've decided to hold strategy, particularly in my business's cash management account. And I'm going to talk about the ways that I'm generating income and revenue and yield off of those holdings by selling some of my upside, by selling covered calls. So we'll get down into the weeds a little more about that, about how we're trying to personally financial engineer that a little bit more. and get your thoughts on that as well. Have a great week, guys.